Seems like you are the son of two really hardworking immigrants who came to the US to seek a better life.
Yeah, it was great. I loved my time at Google. I was there for 5 years, planned to leave much earlier, but just really enjoyed the people I worked with.
You must have been around mentor figures as well as your parents seem very influential. What advice did you absorb from them?
Yeah, I'd say like one thing I look back on that really stuck with me from my parents was
Hello and welcome back to the Masters of Real Estate. This is Nik Shah. Today, we're going to learn from Domingo Valadez. Domingo, how's it going, buddy?
it's going real well, Nick. Thanks so much for having me on the show.
Yeah, likewise. So, Domingo, how do you introduce yourself these days?
Yeah, so I'm building a platform called Homebase. We partner with sponsors, real estate operators to help accelerate their fundraising and help with deal administration for any sort of multifamily, commercial, or retail deals that they're fundraising for.
Yeah, helping real estate operators or sponsors fundraise for real estate deals. Sounds amazing, Domingo. Before we get into your platform, people really want to understand how you're like. So what spirit animal or bird do you think best describes you and your operating philosophy?
Yeah, honestly, I'd have to say like a dog really describes me well just as an animal. They're very loyal to their team. They're very attentive. I think like they're one of the first risers in the day and then one of the last ones to go to bed. So feel very much like I relate to that. And the people that you work with very much like who you see the majority of the time. So you must like who you work with. And I think animals, dogs in particular, tend to do that.
I love that. Loyalty, being attentive, working really hard. Are those kind of the main operating principles in your life?
Absolutely.
So Domingo, as you look back at your past and the tremendous trajectory you had so far to get to here today, what single key metric summarizes your entire career till today?
Yeah, I'd say one of the things we're most proud of is having syndicated 2 deals last year and getting to an investor base of over 3,000 people in about a year's time. And these were accredited, non-accredited investors throughout the US, just interested in investing in real estate deals.
So it seems like the most significant metric in your career so far has been one from the last 12 months. But let's go back all the way back to zero. When you were just starting your trajectory, seems like you are the son of two really hardworking immigrants who came to the US to seek a better life. How has your broad trajectory been so far?
Yeah, I grew up in South Texas, like one of the poorest areas in the United States. My parents were dentists, real estate investors as well. And so growing up, like I would be at open houses most weekends. That's what really first got me into the real estate investing space. Ended up going to Penn, studied finance and real estate there. That really changed my entire perspective on life. Just like the types of people you meet there, the diversity of culture, so many different types of people from very different economic backgrounds that really open up your eyes as to like what's possible. Went to Google right after that. And that was getting the exposure of working like at a very high-end tech company with very, very smart people. And a lot of those people ended up being investors in our company when we left. And really, I'd say the trajectory has been just moving as fast as I can, learning as much as I can along the way, and getting to work with great people.
Wow. What initially drew you to join the program in finance and real estate Penn after being raised around parents who took you to open houses on the weekend?
I always wanted to be in the business realm. Feel like my parents really wanted me to be a dentist when I was a kid. Like multiple summers, I was a dental assistant, literally like suctioning people's mouths. You do that enough summers, you're like, I don't want to do this full time.
Yeah.
I'd say for me, like I was always really interested more on like the real estate side and found a lot of what they were doing to be just very fascinating, like getting to see the different properties, getting to tour them. At first, I didn't want to do real estate, really wanted to do just more traditional finance. Having invested in a few properties personally, getting to see them grow their portfolio over time. And now like building Homebase and talking with so many different sponsors and operators, I truly do see the value investing early in real estate. And that was, I think, the motivation for back when I went to Penn for finance.
That makes sense. And throughout this career journey, You must have been around mentor figures as well as your parents seem very influential. What advice did you absorb from them?
Yeah, I'd say like one thing I look back on that really stuck with me from my parents was like, no matter what you do, give it like your 110%. Like even if you're a janitor working like at a certain place, like be the last person there that's like cleaning every single corner. And I've really translated that into like every job I've had. Like one job in particular, I first started off at Google in like a customer support role. So literally like people that were angry with Google ads. Many people are, just so you know. So they'd call in, say like, my ads aren't performing, what's going on? And then I got a transition from that role into a product strategy role. Everyone I was with was either ex-consultant, ex-banker, and my manager at the time was like, I'm not going to hire you. I'll give you a rotation, and if you do well, then I'll hire you. And so I used to wake up at like 4 a.m. to get work done before anyone else, and then I'd be the last one in, and that then translated to a full-time role. But that's kind of the philosophy I've taken. A big piece of that was because my parents taught me that. And
Wow. Wow. So it seems like you got a job at Google, but it was in a tough role and you really wanted to go into product and you somehow landed a rotational role, but you still overcommitted, showed an insanely strong work ethic and that helped you get into a permanent role. And seems like you stopped your career at Google on a pretty high note, right? How was that like towards the end of your time at the firm?
yeah, it was great. I loved my time at Google. I mean, I was there for 5 years, planned to leave much earlier, but just really enjoyed the people I worked with. I'd say the piece that made me leave was just I wanted to start my own company. I had said I was going to quit for literally like 2 years before I finally did. I know, I feel like it always takes longer than you think. And then luckily at the time, like my manager, my director, skip level, like they all really believed in me. Actually, angel invested in our company when we left. And I've had really good relationships with the people I used to work with.
I absolutely love that. And then after working in tech for so long and getting formal education, finance and real estate, how did you come back to real estate? What motivated you back into the real estate industry?
Yeah, I mean, I'd say for me, it was more the realization that home ownership had gotten so unaffordable. Like truly it was easier for my parents to buy a house and they came here with literally $100 to their name than it was for me to own working at a company like Google in San Francisco. Of course, like cities are really expensive like San Francisco versus like McAllen, Texas, which is one of the poorest areas in the US. But just that mental philosophy of like, why is it harder for me to own? And so that was really the piece where I started exploring, is there ways that we can democratize access to real estate ownership? Can I get investing in it personally? And so that's really what put me back down the path of investing in real estate.
So far, it seems like you've had the perfect dream career trajectory that most people could dream of. Now, have you ever been at a phase where you felt like you couldn't see the light at the end of the tunnel?
Yeah, I wouldn't say it had the perfect career trajectory. That's very kind of me to say. I'd say there's definitely a lot of challenges throughout each leg of the journey. I would definitely say I've had a lot of moments in my life where I feel like I can't see the light at the end of the tunnel. When I was first working in my role in customer support, like you go to 4 years of education, you're like working with super motivated people, and then you find yourself answering phone calls, people complaining about ads, and it's very hard to transition out of those roles. So if you start there, it's very hard to transition out. So at that moment in time, I was like, what am I going to do? The other piece was when we first started Homebase and like we were trying to get things started. It took us about 6 months to first launch our platform. And even after launching, like if you're trying to create a platform that lets people crowdfund into properties, like you truly need virality. You truly need to be able to continuously grow, know what's going to be the next property you bring on. So that was very challenging to do. And even today, like it's like we have certain growth metrics we're trying to hit. Can we hit them? We'll see. We've come up with a ton of hacky solutions to attempt to get there. But the path forward is by no means certain or clear.
Indeed. And it seems like you have overcome these challenges significantly. Going from customer support to product at Google is almost an unheard type event. Similarly, trying to launch, a crowdfunding platform in real estate in a crowded market right now seems pretty tough. What was your journey like with building Homebase? How did you evolve through that journey?
Yeah. So when we first launched Homebase, we were a marketplace to let people invest in fractional real estate for as little as $100. We launched in April of last year is when we first went live with the platform. We successfully sold 2 properties that way. Like we actually sold them out and we got really lucky. Our very first home sale ended up going viral. So if you look up like Homebase, Texas House, Solana, we were tokenizing and using crypto as our backend. That allowed us to go viral. We got thousands of users signing up in a very short period of time. And then that allowed us to very quickly sell a second property, using that momentum from the virality. Ultimately, like interest rates went up tremendously in a very short period of time. And then to have a crowdfunding platform, like you continuously need new deals and it at one point becomes very operationally intensive. And so we came to that realization pretty early on. But we built a lot of software for ourselves to make that process much simpler, from fundraising to investor communications to compliance, accounting. Like there's so much that goes into syndicating deals. And then earlier this year, we started getting reached out to by different operators to say like, hey, we've seen you guys. Can we use your platform for our own deals? And so getting this inbound interest, we're like, there's probably a market opportunity here. We've figured, like we've seen truly the pain points ourselves. We felt them, we built from. Is there a product here that we can sell to others? And so that's really what drove the pivot. It was really a market pool. Now, of course, this market is still crowded. Like there's other players in the space. There's a lot of SaaS is now crowded, but figuring out how to differentiate ourselves, figuring out like who the target market is that is not being currently served by existing solutions. That's really been what we've been figuring out. But we launched this platform in May. We now have 6 customers that are using us, and we hope to continuously grow by the end of the year.
Yeah, you might have customer number 7 in you. So, I'm very curious to understand. So, but for our listeners who have never understood what a syndication is, or an operator is, or a GP is, and how commercial real estate syndication works, what pain points do your customers face, and how does Homebase solve them?
Yeah. So first, I'll explain like what a typical syndication is, and so that's typically someone source a deal, whether it's multifamily, commercial, and you can think of this as maybe like an apartment complex. It's like 100 doors, and they say like, okay, this is a $10 million deal. I actually don't have all the money to buy this myself, but I can probably raise from friends, family, and outside investors to purchase this asset. And so to do that, you now need to run a process where you're having a lot of conversations with different investors to get them excited about this deal. You need to put together a deal room that you share with, has all the financials of like what you project the building to do over 5-10 years. You're likely going to be doing some value add service, improving how the asset's operated. And it can be very, very stressful because in a very short period of time, you have to do all of your diligence in terms of like inspections, getting someone to check the property, have all these different conversations with debt providers, lender, like so many different third parties. And then on top of that, you need to fundraise the equity side for that deal in like a 45-day window many times as you put it under contract. And so doing all of that simultaneously can be very overwhelming. And so what our software does, it helps you on the fundraising side by helping you put together a deal room. So instead of now having to have a conversation with an investor, say, I'm going to follow up, let me send you all these documents through email. Okay, you get it. Let me send you now the DocuSign to sign. Okay, send me the wire. Okay, I received it. You can just send this deal room, which is through Homebase. They can see it. They can immediately make an account. They can invest directly within the platform. And then you receive the money and all the documents associated with that. And then as an investor, you can now see, okay, I invested $100K in this deal. I can now see that investment within Homebase. And then I can see my distributions. I can see how it's performing over time. So it's really a lot to alleviate a lot of those operational challenges that you have to do as a sponsor in a very short period of time. Homebase is very much built to streamline that entire flow.
Yeah, that makes sense. And just for listeners listening who are not as familiar with the real estate world, the sponsor, a syndicator, an operator, a GP, or a general partner, all essentially are colloquial references to the same thing, which is individual or a group of individuals putting the deal together. So it seems like, this is a crowded marketplace itself. I Googled this in the background and, Invest Next, AppFolio, DealPath, Syndication Pro came up. So what do you do at Homebase that you feel separates you from 99% of the rest of the market?
Yeah. So a lot of these softwares have been around anywhere from like 5 to 10 years. A lot of them look and feel quite outdated. They're very, very feature heavy. and you'll find out that most people use maybe like 4 out of like the 30 to 50 features that these platforms have. But yet you're paying for all the features. So what we basically figured out was, okay, what is truly the bare minimum that people need to use? A lot of times it's just the deal room. It's just very basic investor communication to show updates. You want a dashboard to showcase your investors so they can see their investment. That's really like the 3 main things people use. And then on top, some people use waterfall calculation as a distribution. Those 5, I'd say, like, are the top key things. So we're trying to do that very, very well and make our to be very, very cheap. And so we want like first-time operators, people that are first starting off. Don't use Excel. Like, we know how painful that can be if you're doing that. Use Homebase instead. And that's really where we see the current gap in the market. And, we charge like $250 a month, regardless of the size. So we don't scale right now. We're truly just a SaaS fee. Well, a lot of these other platforms, they scale up with you. So it feels very expensive. And so, yeah, that's how we've been differentiating ourselves so far. We've actually had people switch off of other platforms already just because they like the experience. And so we're hoping to continue that momentum going into the rest of the year.
I love it. So seems like you're dramatically improving the UX, focusing on the 4 or 5 top features that all syndicators slash real estate GPs need, and then doing it for a very, very cost-effective pricing and not charging more for, raising more capital. Seems like you're building something that's better as well as cheaper, and that seems like a winning strategy. It seems too good, to be honest. Like, are there any risks of working with Homebase?
Yeah, I mean, the risk that comes with working with any early stage team, like you're basically betting on the founding team to keep going and figure out like a winning go-to-market strategy. I'd say a lot of our early customers, they believe in us, like have really bought into the vision of what we're building. And that was a big reason why they're choosing to work with us. They know that they could get better features somewhere else because those solutions have everything they're looking for, but they really appreciate like the slick UI, how easy it is to onboard investors, and really believe in the vision that we have.
Makes sense. And, what is your monetization model? Seems like you're charging $250 a month, which is roughly $3,000 a year. How do you see this model scaling up for yourself and your team?
Yeah. So the nice piece about this is there's actually a lot of other ways to monetize outside of just a traditional SaaS fee. So every single sponsor or operator needs debt. And so if now I as Homebase can refer this equity investor to a debt provider, you can make anywhere from like 50 to 200 basis points as a referral fee for connecting them with that debt provider. Now I can potentially refer an insurance provider. There's so many third-party partnerships you can do. And we, as the back office platform, we do get a lot of insights into how these people are performing from fundraising, from how their historical deals have performed, because we have that data. So we can actually make a lot of these connections happen and then get fees associated with that. So that allows us to then keep the software costs, smaller, and focus more on these third-party fees that we don't see as much of our competitors doing. I mean, I'm sure if we're successful, they're going to copy us and start using that model. But we do see that as a gap currently. And so saw that as our path to really scaling this business.
Yeah, that sounds very robust indeed. So you're essentially putting the user at the center of the ecosystem, providing them with a core service for the lowest possible cost. And if they need your help, and if you can truly get your help in getting a very cost-effective access to debt or great property insurance company, then you can make referral fees from that as well. That sounds pretty smart. Plus, it seems like you mentioned that you have this database of 3,000 investors. How effective is that in also creating a unique differentiator? And, how effective has it been in action as well?
Yeah. So I also run a podcast. And so we've been able to have some really cool guests on the show because we share those deals with that 3,000 plus investor base. And so even though we're not doing deals ourselves, like those people still are in this list because they want to invest in real estate. And so then we share those episodes with this investor list. And so some of those people have then gone on to invest with some of those operators. And then some of these operators have then become customers of Homebase because they see the value outside of just the software. But we're also introducing you to investors. And we've also began to connect operators with each other because you have so many people that lead deals, other people that just fund deals. And so we've started to make connections between those two groups as well.
That sounds amazing. Yeah, that's a winning strategy. Coming from somebody who's running a podcast themselves, I completely agree with the strategy and approach. So how is it like working at Homebase? How do you define the culture there?
Yeah, I mean, I'd say we all work very, very hard. We work 6 days a week. We used to work 7, but if you work every single day, it's not ideal. Everything really starts to blend together. So we take Saturdays off, but I'd say like we're all very, very hardworking. I think there's a very strong sentiment of trust. Like if someone says I'm going to be doing something, like we know they're going to get it done. Very much value honesty and respect. So I'd say people are very transparent with what they're working on. Something comes up personally, and people feel very willing to share that with the rest of the team. And I'd say we also have like a high bar of excellence, just attention to detail. Sponsors care a lot about the little things. Like that's great design for product. It's about the attention to detail of the little things. And so we try to do that with the philosophy of how we've been building our platform so far.
I love that. And see, like it's for working with our team that has, extremely hardworking people, very strong sentiment of trust, where honesty and respect is valued a lot. And they have to have a very high bar of excellence to over exceed the expectation of customers. How do you maximize the productivity from your team members and your resources at Homebase?
Yeah, I would say like our productivity is probably like tripled in the last 12 months. And a big piece of that has just been like AI. As cliche as it sounds, like the ability to have co-pilots, not only when it comes to coding, when it comes to development, when it comes to even like myself writing emails, running a podcast, creating content on LinkedIn, like so many different workflows. It's very much enhanced by using co-pilots to help me every single piece now.
Fascinating. So Copilot helps with coding. I can imagine that. Writing emails, it's unimaginable. What about running podcasts uses AI?
Yeah. So when it comes to summaries, when it comes to like the content that I post on LinkedIn about it, like I'll put the entire transcript into ChatGPT and I'll say like, give me the top 3 pieces from this, and then I'll post it publicly on LinkedIn. And so like that's helped a ton when it comes to just LinkedIn content creation in general. I'm like, give me the top 5 stories that's happened this week with big companies. Okay, let's write about this one. Let's go in depth. I'll give it a lot of content from top writers that I like Packett McCormick, Tim Urban, like a lot of different people that write in tech. And I'm like, write it in this writing style. And then I keep iterating until I like what I'm getting. And then I publish.
Oh, sounds amazing. And is there a specific tool set you use? Because it seems like ChatGPT has fallen behind the times on some of these latest innovations.
Yeah. So I unfortunately have not been exploring other tools, very much still using ChatGPT. Like I'll say I'm the only one that uses it on my team. Other people are using some of the more advanced ones, like Cursor AI, something that our CTO just started using and to make himself faster for development. But yeah, I'm still using ChatGPT just because I have so much data in it now from like so many conversations that I don't want to import that all into something new, at least right now.
Yeah, and we don't even know if it can be successfully imported somewhere else.
Yeah, exactly.
So it seems like there's a barrier to exit.
I know.
With ChatGPT.
They probably didn't even mean for that to happen, but it did.
Yeah, I can imagine. So how has your, what was the story behind naming the company Homebase CRE?
Yeah, so our name is Homebase and our website's Homebase CRE. And so the motivation behind Homebase, we really wanted it to be the place that you felt like is a central piece of everything you're doing. And so Homebase to me is always like, you're going to your home base. That's going to be like the deal rooms. All your investors are there. Like everything about you as a business, and for sponsors is like their full-time job. So we want this to be the central place for everything. And then our logo is a flag. And I don't know if you were a gamer when you were younger, but I played a lot of Halo back when I was a kid. And one of the classics is capture the flag. And so like that was really the motivation behind the flag of like you're planting it on your home base, putting the flag down.
Oh, the flag is planted on the home base. Oh, that now. And what's been the most rewarding part of working at Homebase?
I'd say the most rewarding part has been truly when you have customers that are very excited by, your platform and how it's like enabled them to be faster with their business. I feel like that is truly where you feel very, very rewarded. For the last iteration of Homebase, we had so many first-time real estate investors. I remember getting so many emails saying like, I'm so excited. This is my very first investment in a property. Thank you so much for the opportunity. And we took checks that were like $100, $500. So that was also very rewarding. So it's truly the experiences you can give to users when they really enjoy your product.
Yes, I absolutely agree. There's something about customer delight that's so satisfying as a founder of it. Now, as you think about the future at Homebase, what are the biggest challenges you're facing in scaling your team or your operations to reach your aspirational goal over the next 12 months?
Yeah, I mean, sales is always a challenge, right? You're always trying to figure out how do you get from like 0 to 1, then 1 to 10, 10 to 100. We're very much in the 0 to 10 phase right now. So it's how do we get our first 10 customers since the pivot? We're a little bit over halfway there. We've been doing a lot of really hacky solutions to get there. Like this week, I had about 25 sales calls, and a lot of that's because people have their calendars on their website, and I just book time on people's on calendar. And you can imagine like 30% people don't show up. I've actually had a lot of people show up this week. So I had some really, really good conversations. And some of those serendipitously have led to some pretty large contracts that we're now negotiating just because of like this one-off. Sometimes people are like, why are you scheduling time? Leave me alone. But, some people are like, no, thank you. Like, this is very timely. Truly, it's about finding like the hacky. Well, to me, like sales is very much top of mind and everything we're focused.
Calendar link sounds like a really nice hack. I'll try it myself. Is there any other similar hacky solution that has really inspired you recently?
I'd say that and LinkedIn automations. So something you could theoretically do, like I think starting a podcast, amazing, because you can effectively start adding people in your ICP and then share with them episodes of like, hey, I just dropped this episode with this person. This is what we talked about. We do that now with people that we're doing outreach for. And people typically don't mark it as spam because they'll just assume they subscribed. And it's very much a good way of start like subtly building trust because they see you, they see your name, like you have someone that's like an expert in their field. I'd say like that's been very effective. And then LinkedIn automations, very strong.
Yeah, I love it. So for, somebody who is a real estate operator or a multifamily investor or a sponsor that's listening right now, that loves your work ethic, loves your, the direction which you're going, wants to bet on you, how should they reach out to you and your team?
Yeah, so you can reach out to me directly on LinkedIn, just Domingo Valadez, Homebase, typically one of the first searches that appears if you look that up, or they can go to our website, homebasecre.com. Both of those have a lot of information on us as founders in terms of the services that we have for our company. So yeah, either of those two would be great.
And if they fill up a sign up form on Homebase CRE, it will directly go to a calendar that they can use to schedule time date as well.
Yeah, so we very quickly are happy to do demos of folks. You can also sign up just on our mailing list if you prefer to just get content. But we're very attentive to getting time with folks and just sharing, our solution or hear about the pain points that they may be having with their day-to-day operations, and then seeing if we can build something to solve for.
Makes a lot of sense. Domingo, what's your ultimate vision for the future of the commercial real estate, fundraising industry?
Yeah, I mean, I'd say right now we're in a tough time for commercial real estate in general, with interest rates being so high. A lot of people haven't been able to do deals. And I'd say that that's been actually very telling because now everyone's very much focused on costs, which is why a solution like mine's been resonating relatively nicely at this point, just because we're so much cheaper than a lot of other players in the space. But ultimately, like if Homebase is very successful, our vision is getting so many different operators that we can get to about like 2 billion in assets under management over the next few years. And then creating a marketplace that allows for secondary trading of assets to happen for these syndications. Because syndications very similar to venture capital, long hold cycles, 5 to 7 years. You're not going to see any liquidity outside of distributions. However, there's theoretically a market for this. People want to buy, especially if you stabilize an asset and there's history behind the sponsor. There's very much an ability for there to be a secondary market for people that want to sell out and then someone maybe that wants to buy in. So I would love to be able to enable that at Homebase. We'll have access to a lot of great data because we'll have all the historical valuations, the distributions. We'll know how these assets are performing, and we could very likely like launch a REIT, and that REIT maybe invests in some of the top performing syndications, and then that acts theoretically as liquidity. If investors want to sell out, they can do it into the REIT, and then people can buy into the REIT to get access to all this private market. That's really, that's how we're thinking about it long term. as a liquidity solution for folks. And
So you want to enable secondary trading through a REIT and not necessarily a crypto tokenization platform, which was your original thesis.
yeah, so the REIT itself could be tokenized. It doesn't have to be. I think when we get to the point where we're exploring secondary trading, I'll be looking at what financial rails make the most sense to make this.
Completely agreed. Yeah, I'm on the REIT bootcamp as well. We looked at tokenization solutions for our own platform a while ago, and while they all look amazing, just the tag of crypto, it scares away most, mom and pop investors. So doing it through REIT is much more. It's well regulated. It's a well established industry, and also easier to trade directly on the NYSE or the Nasdaq instead of building your own.
100%.
As you think about the far future, are there any black swan events that could have a tremendously positive or a negative impact on the industry?
Yeah, I mean, if a ton of different large commercial real estate like operators, like private equity funds default on loans, and you start having like a cascading issue in real estate investing, like that would be really bad for our business. The flip side of that would be everyone's projecting interest rates to continuously now go down. Inflation has started to be abated. So people are expecting to do a lot more deals next year. Our whole market is like early operators, people raising, anywhere from 1 to 10 million. So there's a lot more people coming in. They need software, and we're going to be one of the cheapest solutions. So that's truly like the upside swing. We're preparing for both.
Yeah, I completely agree. It does seem like, we're recording this on Friday, September 13th. Not sure when this is going to be released, but in just 5 days' time, on September 18th, we could have the beginning of a new era in the Jerome Powell regime with, rates who had the fastest increase in the 18-month time frame ever in the history of interest rates now could start decreasing, and commercial real estate could actually see a lot of belt loosening around, which the belt was really tight for the last few years, and there were a lot of delinquencies. Domingo, I'd love to ask you a few rapid fire questions.
Absolutely.
So what do you feel about the commercial real estate industry that would surprise most listeners?
I'd say that so much of the commercial real estate industry in terms of just sponsors raising capital for is very much tied to multifamily. That makes up like a huge chunk of commercial real estate. I didn't realize that coming into this. I really thought when I think commercial real estate, I think office, I think retail, but a big chunk of it's multifamily.
That's fascinating indeed. Yeah, multifamily, by some estimates, makes about 60 to 70% of the commercial real estate industry. But I'll have to go back and check the number. Now, let's say a family office calls you and says they have a liquidity event and they've allocated in a bunch of different asset classes, but still haven't allocated to real estate yet. And let's say hypothetically they have $100 million they'd like to invest. How would you advise them?
Yeah, I would say look for deals like you really trust the sponsor to be a great operator for. If anyone can find good deals in this market environment right now, that they're going to be great deals when interest rates come down because they've made those numbers work even in some of the highest interest rate environments, and where inflation's high, everything's really going against you as an operator. But if you can make it work now, it's going to look in a few years. I had the opportunity actually of going to an event last night where there was an operator named Andre Oldacre who's presenting this very large green deal here in New York. Funny enough, he needs about $100 million investment for this deal. He found so many different tax credits that New York provides through electrical, through redeveloping office space into residential, where he literally was getting $75 million in tax credits for this project. So that level of diligence and finding great operators like him, I'd say that'd be my recommendation.
Yeah, absolutely. The operator matters more than everything else, because eventually the market can turn sideways. Where if you are betting on an honest operator, they will take care of you first. Domingo, how's your personal real estate portfolio like these days?
Yeah, so I invested in a fourplex. I own a single family property. Outside of that, that's really my only investments in real estate. Being a founder for the last 2 years, or a year and a half of it, I didn't have a salary. So a lot of my personal portfolio went to funding my livelihood.
Yeah, absolutely. Domingo, what's the best financial advice you've ever received?
I'd say when you first graduate, you very much want to make it big very quickly. And I'd say that's why you've seen crypto grow as quickly as it has. A lot of people like to gamble now. I think we've, as a country, become very, very gambling heavy. I'd say some of the best advice I've gotten is just be patient invest in things that actually have realistic returns, and you're going to see like the money compound slowly over time. And I wish I would have followed that advice when I first graduated. Even though I studied finance and real estate at Penn, like they did very little to teach you about personal finances. It was all about like, oh, you need to acquire this like 100 million plus asset. Here's how you do it, but never about like, how do you manage your personal portfolio? And so I think that was some of the best advice that I'm now seeing in my later 20s.
I completely agree, Domingo. Investing in short-term, gambling-related bets never really works out. Long-term growth is the best way to grow your personal financial health. What organization or institution would you fix if you had it?
That's a great question. I'm not going to dive into anything political because I feel like that's just a can of worms. I feel like the education system in the US needs so much work. It's pretty crazy that the people that are theoretically shaping the future of our country get paid some of the least amount in wages across like all industries. I think that's completely backwards. And so that's where I wish I could be more impactful.
That's very insightful. Final question, Domingo. If your loved ones agree to be mentored, what's the number one skill you would teach?
I honestly would just teach things tied to grit. Like I think the ability to just get up after you've been knocked down, like in so many different situations, like if you're not getting rejected at least like 10 times a day, you're not pushing your boundaries. Like I get no so often, whether it's investors, whether it's like potential customers, and then going through that journey until you get the yes makes it that much more rewarding, and you get really thick skin.
Yeah, great. I think Angela Duckworth is a really good book on that, and that's been my guiding factor behind it. But how would you teach grit to your loved ones if they allowed you to mentor them? How would you teach them?
Yeah, that'd very much be like, it'd probably be very different stages. So if it's a loved one that's maybe like a kid, like someone's child, I would put them in a sport or like some sort of class that they wanted to sign up for originally. Then after doing maybe 5 classes, or like, I don't like this, I probably would force them to do at least like 20 classes. And then after 20 classes, okay, if you still don't like it, we can remove you. I want you to like stick through it so that you can actually feel the pain of like, okay, you wanted to do this, you have to commit to it now. So that'd be like if they're younger. I'd say if they're older, where do you want to be in 5 years? What are the goals that you have to, like, what are you doing to actually achieve that? It's going to be challenging to get there, but what are you doing every day to get to those goals? And that translates a lot to even as a founder. Like, for example, like one of my goals is sales, and like getting to a certain revenue metric by December is what I'm doing in that day, hitting that goal. And if it's not, then tomorrow I need to figure out, okay, how do I align my calendar to make sure that I'm doing things that help me hit that goal? Because otherwise then you're prioritizing the wrong things.
Wow. That, focus on pushing boundaries, never quit too early, and work every day towards your long-term goals. That was Domingo Valadez. He's a dog, loyal to his team, very attentive, works very hard, learned from his parents to give 110% no matter what, and still works 6-day weeks after being burnt out. If you're a real estate operator, a multifamily investor, or a sponsor who's looking for cutting-edge software as a service platform to manage your syndication that is highly cost-effective but will grow a lot, the pricing won't grow as you grow, reach out to his team on homebasecre.com or ping Domingo on LinkedIn. I'll add the link in the bio. This is Nik Shah. If you ever want to talk about real estate, shoot me a note on CEO@home.llc. Thanks, everyone.